Are you ready to take your business to the next level? Every day there are countless books and articles that are published offering the key on how to make your business a success. It's easy to feel overwhelmed trying to keep up and run your business. That's why Deb Creer created the Business Power Hour. Keep up on the latest trends, best practices, and techniques for how to make your business a success. Let the Business Power Hour do the heavy work for you.
Good morning, good morning. I am Deb Creer, and I am passionate about giving professionals the tools that they need to make themselves and their businesses as successful as possible. And today we're going to be talking about that one thing that nobody really wants to talk about, and that's money and finances, and unfortunately, some of the problems that you can get with money and finances. And we're going to be talking about how to resolve, hopefully not get into that place to start with, but then we're going to be talking about how to maybe resolve some of those financial issues. So please join me in welcoming Jen Lee to our program today. Good morning, Jen. How are you doing today?
Good morning, Deb. Great. Thanks for having me.
Great. This is a discussion that we really need to have, and we really need to have it often. So before we jump into it, let me tell people a little bit about you, and then we will dive in. Mm-hmm. So Jen Lee is a debt and credit attorney and owner of Jen Lee Law, Inc., a law firm with offices in San Francisco, San Ramon, and Tracy, California. She is a leading expert on debt, credit, and financial stress, having been featured in Consumer Affairs, U.S. News and World Report, and other national publications. Jen is the creator of several innovative programs to deal with financial stress and rebuilding after financial disaster. So again, Jen, welcome to the program.
Thanks, Deb. It's really great to be here. I enjoy your program.
Great. Well, thank you so much. Well, I always like to find out from my guests how they got to where they are today. And you have a fabulous background that really has led to putting you exactly where you are today. So tell us a little bit more about how you discovered this as your passion in life.
It's really interesting how your life takes these twists and turns and you end up where your passion is supposed to be. So I actually was a college dropout. Okay. I originally went to college and I wasn't really too excited about it. I don't do classes well. This was before online was a thing, before you could do that. And so I started working at an insurance company and got some business experience, some management experience. Then I got an MBA. And then I thought, well, law school sounds kind of fun.
Yeah. Oh, nothing else to do, right?
Right. Let's go to law school. And so I went to law school thinking I would do a lot of estate planning and financial planning because my background, insurance, and it kind of made sense. And I graduated law school in 2009. And guess what the economy was like?
Oh, yeah. Financial went.
And so I was like, well, what can I do where there'll be clients? Because I opened my own firm straight out of law school. I didn't go work for anyone else. And so I need something that was going to be clients. And it was a really financial stressing time out there. And so bankruptcy was what I got into right out of law school, helping people figure out how to get out of these financial issues. And I found out that I loved it. It was so interesting to help people with their financial problems and figure out what to do next that it's turned into this great career for me. So,
Fabulous. And I think one of the things that so many people, especially if we've not had any type of true financial distress, we think, ew, someone who declares bankruptcy is a horrible person, a bad business. Could be your neighbor. It could be, your parent, your kids, all of these things. There are so many things that lead up to it. And really, yes, there are those shady folks out there, but for the most part, unfortunately, the people who find themselves in these situations really are nice, great people. Yeah. They just made some bad decisions.
They are. And I often tell people, I try to keep people out of bankruptcy, of course. I don't want people. That's my business model is based on keeping people out of bankruptcy. But I also tell people that bankruptcy is a strategic tool that's out there. And smart people use bankruptcy to fix their situation. And the middle class and lower class often think of it as this horrible thing that you had to do. Whereas smart business owners think of it as, oh, this is a tool that's there for me to reshape my future. So, yeah.
Yeah. Businesses can kind of use it as a way to regroup. And it's not that they're using it simply to rip people off and get rid of all that debt.
Exactly.
They really are using it as a way to restructure.
Mm-hmm. They really are. And so getting over that mindset a little bit is usually the first hurdle that my clients are facing, is how do I actually ask for help to resolve this and listen to all the options that are there. So,
right. And I would imagine that because, it is still considered to be something that people are embarrassed about.
Yes.
They wait in many cases, far too long to talk with you. So, say I come to you and say, Jen, I can't pay my bills and I lost my biggest client.
Yep.
What am I supposed to do?
So a lot of times you are correct. People wait way too long. And by the time they get to me, bankruptcy really is like the only thing that we can do to fix everything. So when someone comes to me early on and says, I can't pay my bills, I'm like, okay, let's take a look at what can we pay. A lot of people don't have a debt problem so much as an allocation problem. They need to figure out where to allocate debts to. Many people, the mistakes they make is they start cashing out retirement funds,
right?
Or they start taking on, consolidation loans and things like that. So if someone gets to me before that, I'm happy, because then we can usually start looking at what does the budget look like? Is there a way out of this? Or should we strategically do a proactive reorganization of some sort? So earlier the better, honestly.
Oh yeah. And it's funny because when we start looking at things and budget, hello, budget.
I hate that word.
Really is the first step. And I'm one of those that's guilty of, I look at it and I go, but it was really funny when I took my 2020 business records and then our personal things to our accountant, she was so funny. I love her dearly. And she said, you didn't have a lot of business expenses. And I said, well, no, because the world shut down. And so I ended up paying more because I hadn't, we hadn't had, I wasn't attending business meetings, all of those things. But even just looking at the budget, it was very funny because, I went probably an entire year without going into Starbucks. And people think, Starbucks are great. We pop on our way to work. We have meetings there, right? Because they've got good Wi-Fi, good central places to meet. But if you just looked at what you spent in coffee costs, whether it's Starbucks, whether it's, your little local coffee shop, all of those things, I mean, that saved a fortune right there.
Right. It was amazing. Like when you start looking at those numbers of what your expenses are, and a lot of people don't look at them. They don't look at the expenses. So.
Well, and then the things just like, what are your recurring monthly things? I've got a couple that it's like, I pay for this every month. What is this? And, and then I think, it's $10 a month. It's not worth it to go in and but if you have a bunch of those,
right, they start adding up.
Those add up, right? Yeah, and I mean, $100, that's only $1,200, right? I can do my math.
Yes.
But $1,200 in a year is a number that's going to get my attention much more than but yeah.
And those numbers can add up when you have debt and things that you need to pay off. It's better to pay off debt sooner rather than later.
Right. And obviously a lot of things that we do we really need them? And the things like, how many television subscriptions do you have? And all of these various things. And so that what I imagine is one of the big things that you really sit down with people and say, let's go through the figures.
Yeah. And that's probably the hardest part of what I do, because I don't want to be critiquing someone's lifestyle.
Right.
Like, it's not my job. I'm a big fan of systems out there that take into account individual needs and wants, and not some, standard thing that everyone has to follow. So that is the hardest part when I start looking at people's expenses and like, okay, did you really need this much of Doordash last month? Yeah. And some people you do. And sometimes it's a family issue that they need to have certain services done, that kind of thing. I'm very proud of myself for not critiquing people's individual choices, as long as it makes sense. And if they can see that it's a problem, then we start talking about, okay, what are other options?
Right. Yeah. Because you don't have to say, did you really need this much DoorDash? When they see the figure,
Right.
you know, they're like,
Well,
oh
yes.
crap, did we really need that much DoorDash?
Yes. I use DoorDash as an example a lot.
Right.
I'm not picking on DoorDash,
Yeah.
but
Oh
it's
yeah. You know,
a big thing.
Uber Eats, you know,
Yes.
I'm big on Uber Eats.
Yeah.
You know? But yeah, you know, all of those things that we really don't stop to think out when we think about when we do several times a month.
Right.
You know, it really doesn't do anything. But yeah, like I said, when my accountant went, wow, you know, or things like business meetings.
Mhm.
You know, I belong to several business organizations here in Atlanta. I think it's great to support your local business community. You know,
Mhm.
that's but you know, each time that I would go, it was $30. You know, that got me a great meal. Gotta love Southern catering, right? And so I got a great meal, great program, great socialization, all of those things. But when you had 4 and 5 of those a month, those added up. And then when all of a sudden I didn't have those, I mean, that was probably the biggest thing
Yeah.
that we noticed when my accountant was doing things. And the funny thing is, I haven't gone back to attending those organizations. I still am a member, but I
Right.
haven't gone back to attending. And so I'm still saving that money.
Yeah.
Yay!
It's interesting how our world changed a couple
Mhm.
of years ago. Yeah.
Right, right. Yeah, that does, you know, how much have you seen people really change, both from a business perspective and personally, in the last 2 years?
So it has been very interesting to see how people have adapted. Some
Mhm.
have, and I hate the word pivot now because everyone
I
uses that
know.
word.
Ew, pivot.
I was like,
Ew.
stop using that word. But it was interesting to see how the people that changed rapidly really got their businesses back up and running.
Right.
And then the
Mhm.
ones that have been hesitant to do that, hesitant to use Zoom and things like that,
Mhm.
have been a little bit behind the eight ball.
Mhm.
One interesting thing that happened in my bankruptcy world is bankruptcy filings are at a 40-year low.
Wow.
And people didn't expect that. Everyone thought
Mhm.
that everyone would be in
Mhm.
so much distress.
Right.
But I think we're going to start seeing that picking up more now that stimulus has ended.
Mhm.
The moratoriums were huge. I had a lot of people that were technically in foreclosure, but weren't in
Mhm.
foreclosure. So I think that's going to change a bit, but everyone expected my business to be crazy busy. And it
Mhm.
was more of a consulting role that I was
Ah,
doing versus a bankruptcy filing role.
nice.
So it
Nice.
was an interesting
Mhm.
switch.
Right. Well, and you know, you mentioned that the businesses that were able to rapidly change, and I think that really was probably what we saw the most. And the business and it was hard because right, we were told 2 weeks. I still, you know, two
Yeah.
weeks we're going to shut down, and the vast majority of us went, yeah, no. I mean, we knew that 2 weeks was simply not enough time. But I
Mhm.
mean, you know, you don't want to panic the world by saying, "Hey, we're shutting down for." We don't know, but you know, but when the 2 weeks really started dragging on,
Mhm.
I think so many businesses and you know some were able to pivot, but many others, I think we all kept thinking this will go away.
Right.
Oh, it's August. It hasn't. Oh, it's December. Oh, it's 2021. And I
Mhm.
think that was probably one of the biggest issues.
I think so. I think you're right. And that the businesses that were just holding on for a couple of weeks, trying to,
Mhm,
or we're just going to shut down,
mhm,
we're not going to do anything.
mhm,
They kept hoping everything was going to come back. And then I
mhm,
saw a lot of business start closing.
mhm.
A lot of restaurants and hair salons in
Right.
California. I had a
Mhm,
lot of restaurants and hair
mhm,
salons that had some major issues.
mhm.
And so I do think that there were some businesses that were easier to switch
Right. Mhm.
ways
But
of
yeah,
doing
if
things.
somebody had to go into
Yeah.
you, you were in trouble.
Yeah, exactly. And
Mhm.
and we're still seeing that. We're still seeing a
Mhm.
lot of fallout from that, especially in California where
Well,
things
and
were.
we got used to it. Like you said, we decided, hey, DoorDash, Uber, any of those things it is so much better because I joke. I don't remember the last time I put, well, you know, once a week I put real shoes on because I have to go do grocery shopping.
Uh-huh.
But those are tennis shoes. I mean, you know, and or sandals now. And
Mhm.
but it is so much easier to order in. You know,
Yes.
yes, there is obviously a cost to that,
Mhm.
but we're not having to go out to get, you know, get dressed.
Yeah.
All of those things. And it's, you know, it's just so much easier to be able to do that.
And I will tell you one thing that happened in the legal world or the bankruptcy, especially the bankruptcy world, is when you file for bankruptcy, there's a meeting with a trustee that takes place. It's a really usually a quick meeting,
Okay.
but it used to be in person.
Right.
In California, you would sometimes have to drive an hour, hour and a half to get to that meeting for a 5-minute meeting, and then hour, hour and a half home.
Right.
And of course, they switched to Zoom and telephone
Right.
during that time. And now they've realized that there's such an access to justice issue where it's so much easier for people in bankruptcy not to have to commute 3 hours to attend a simple meeting. So I do think there were a lot of positive changes, especially in the legal world, that came out of the shutdown. So
well, and yeah, I mean, there's been yes, there were so many tragedies and things, but I think we did learn a lot, and we still are. The online world obviously drastically changed, and we all, really went, ooh, wow, we, depending on what we're doing, we can work at least, bigger area, maybe more than one county, more than one state, maybe we could work worldwide. I know it's a little bit different from a legal perspective because, there's different licenses and things.
There's all kinds of options though.
Right. But you can still be giving informative webinars, say, to anybody, anywhere they are. And so I think that's really allowed us to expand what we're offering.
Right. It has.
And for those of you who are listening, you're not seeing this very cute little elephant above Jen's ear. Is this fuzzy little gray elephant? You just want to pick him up and go. And I guess it'd be her. Her name is Bernadette. But that's actually Burn a Debt. So tell us why you've got this, because I think it's very cute. And so tell us a little bit more about cute little Bernadette.
So what I do is very not cuddly and happy. And so I have Bernadette as my mascot to try to help me make it an easier topic. But what she stands for, how she was born in March of 2017, was that 70% of Americans have a debt or credit problem of some sort. This was before COVID, 70%. And no one talks about it. And so I was trying to find a way to illustrate that whenever you walk into a networking room or you walk into some kind of meeting, picture that 2/3 of that room has a debt or credit problem. And there's this elephant that no one wants to talk about. Because people come to me all the time. They're like, oh, you can't tell anybody I came to see you because I would be so embarrassed if they knew. And I'm like, you realize those 4 people have already come. I don't say that.
Yeah, you can't say, no, I've already met Bob.
They don't realize that there are so many people around them that have the same problems, that if we just talked about it a little bit more, it wouldn't be such an embarrassment. It would be more of a, oh, you had that too. Let's move on with life. So that's how Bernadette was born. She was the elephant in the room that she literally came with me everywhere. Now she's the elephant in the Zoom because I'm not in rooms anymore, but I'm in Zooms. So
I love it.
It just became a really good way to illustrate that more people than not around you have debt and credit problems and financial stress.
And you talk about the fact that you do education and counseling with people, and so much of our problems really could be alleviated at the very start. I started my business 20 years ago when I still had to trot my little self down to the Secretary of State's office and apply for my business license. I mean, it was not done on the internet, all these various things. But I met with somebody, and obviously I still remember it to this day. One of the things she told me, she was just doing a lot of general, here's good business tip types of things. And one thing that she told, and I knew that I absolutely had to set up as a business, whatever, and that takes different structure for, all sorts of different entities. But I set up as an LLC, and I knew part of that was because people take you more seriously than just, hi, I'm Deb Crair.
Yeah.
Hi, I'm the president of Wise Women Communications. Very different, right? But this woman, and the bad part is I don't remember her name, but she told me that when I set up my bank account, to pick a totally different bank than my personal account. And I was like, but I like my bank. They're close. They know me. And she said, I wanted to make it difficult to commingle funds.
Yes.
And so talk to us a little bit more about that.
So there are a lot of things people can do at the beginning so they can avoid ever talking to me.
Mhm.
But yes, I totally agree with having your bank account separate, because what happens as a small business owner a lot of times is you start paying your personal expenses out of the business account.
Mhm. Right.
And you start mingling things
Mhm.
together, and you've lost all protection from the business, the entity that you set up.
Mhm.
So now creditors can go after both you individually and the business
Mhm.
if something happens.
Mhm.
And so keeping things very separate is like step number one in
Mhm.
having a business. Don't pay your personal expenses. Don't pay your house rent or your mortgage
Mhm.
out of your business account.
Mhm.
Make sure that you're transferring a salary to yourself. You're recording that, paying taxes.
Mhm.
I will tell you, most small business owners that I work have tax problems.
Mhm.
And a lot of times it's because they've worked really hard all year. They've
Mhm.
done a great job paying their employees. They've done everything. They maybe have paid themselves, but they
Mhm.
didn't set aside money for taxes.
Right.
So they get to the end of the year and they realize,
Oops.
oh, I don't have the
Mhm.
30% left over that I need for taxes.
Mhm.
Where is that money going to come from? And they ignore it then,
Mhm.
because that's the other elephant in the room a lot of
Mhm.
times is, if I ignore it, it'll go away.
Right. And there are many things that I might, but I do not ever ignore the IRS. I mean,
Ignore them.
they will
Please don't ignore
find
them.
you and they will get you.
They will. Yes. And the IRS is not, they can be worked with. There are a lot of
Mhm.
things that can be done with IRS debt. Like you can get rid of IRS debt in bankruptcy, which a lot of people don't know.
Mhm.
You can reorganize it. But if you ignore it, it becomes way worse than it could have been if you
Yeah,
had
because
just
there's
dealt with
that
it.
little thing called interest.
And penalties. The penalties
Right.
aren't pretty either.
Mhm. Yeah, yeah.
Yes.
They don't just say, "Oh, you owe us $1,000." Pretty soon it's, "Oh no, you owe us a lot more than
Yes. A lot
$1,000."
more. Yes.
Mhm.
So those kinds of things, keeping your business and personal separate, is like rule
Mhm.
number one for business owners.
Right. But, many times when we're starting out, in fact, probably 99% of the time, we are using our personal funds to
Mhm.
to start the business. And so
Mhm.
how do we do that? How, obviously we keep track, but how do you suggest that people do that?
So usually if you're starting a business and you're putting your own capital in, then you should put your capital into the business account, the money that you're investing into
Okay.
the business account.
So
Don't pay
say
your,
you're going to put in
yep,
$5,000, you put
right,
$5,000 into that separate bank account.
right, exactly. Just so it looks like you funded your business and that kind of thing.
Mhm.
The other thing that people often do is they take on credit
Right.
to fund their business.
Mhm.
And if you're just starting a business, likely you're going to have to take on a personal guarantee for all of
Mhm.
that credit. No
Mhm.
one's going to lend a business money that has
Right.
no
Yeah, you can have a
history.
really cool business plan, but
Right.
if you don't have money that's there, or approved income. Mhm.
Right. So if you're taking on credit, just know that you're taking on credit in your name. You're
Mhm.
not, you can't just get rid of that with the business. If you shut the business down, you're personally
Okay.
liable.
Mhm.
And that's what I do see a lot of business owners who come to me like, I have a debt problem.
Mhm.
And we end up doing a personal bankruptcy because all of the debt for the business
Mhm.
came from the owner's
Mhm.
credit. Personal guarantees on leases too. If you're going to go
Right.
lease office space, which is a different
Mhm.
animal these days too, because
Right.
people don't have office space,
I
but
know,
almost all
office.
landlords,
Mhm.
yeah, they're going to
Mhm.
require personal guarantees.
Mhm.
So if you default on that lease in your business, you're on the hook personally.
Mhm.
So understanding what you're going to be legally liable for, if something happens, plan for
Mhm.
the worst.
Right.
That's really important. And people
Mhm.
don't realize that, oh, this is
Mhm.
business that I can't be held responsible for.
Mhm. Yeah,
Actually,
no. If you sign that little
little,
thing,
yeah.
it's you that could easily be on the hook.
Yes.
And that is part of why I always tell people, set up your business as that legal entity.
Yep.
Because that will give you some protection. And obviously depending on what it is, you might also need insurance, all of these
Right.
things. I remember years ago we were having a tree cut down in our yard, and so this guy was coming to do a quote and all of those things. And the first thing he does, he hands me his insurance forms so that we knew he had insurance. I mean, and luckily we didn't need it, but it really was just kind of one of those things. But I have, I provide a service.
Mhm.
I provide basically my brain, doing things.
Yeah.
But so I have an umbrella policy. because you
Very
never
good.
know when
Yes.
something might happen.
And I will say that insurance, people are woefully underinsured for the most part. And I'm always looking at insurance because I came from insurance before I went to law school. So I have the insurance background to look at things. And I have a lot of bankruptcies that get done because people didn't have an umbrella policy.
Right.
They got in a car
And
accident.
umbrella policies are so cheap.
They're like $100 to $200 a year for an umbrella policy.
I think
for
mine
$1
is
million.
$219 for $1 million.
Yes, exactly. So if you don't have an umbrella policy, that would be like the first recommendation I would make, because I've had so many bankruptcies in the last couple of years that could have been avoided if they had an umbrella policy. Bankruptcy, I was still able to protect their assets, but they still had to go through the whole stupid, icky process of it. No one wants to go through.
And have that little black mark, as we call it, next to their name.
Yes, yeah. And so umbrella policies are huge, and making sure you have the right car insurance coverage. Like, actually use a professional for insurance.
Right.
Don't go online and find the cheapest one. Use a professional for it. Is my
especially if you're using your vehicle for business purposes. You know, it does take a different type of insurance.
Yes. And there are some insurances who won't cover you if you're doing like Uber or Lyft or something like that, some car insurances. So make sure that your agent knows what you're using your car for so that you can get the right coverage.
Right.
So.
Yeah, because there might be a little line in that policy that says you can't do that. And then if you're in an accident, again, there goes your personal assets.
Exactly. Yeah.
So what are other mistakes that people make from a financial perspective? And let's go first from the business perspective.
So from the business perspective, after they get set up, taking on too much debt, thinking, oh, I'm going to make this back, or I'm going to be able to expand my business. I do see a lot of people take on a lot of these merchant advance loans. I don't know if you've ever, MCAs, they're often called. And what they are is bank statement loans, and they're online lenders who you upload your business bank statements in 24 hours, you get $50,000 in your bank account. Right? Exciting. But what they don't tell you then is they take either a daily draw out of your bank account, because now they have access to your bank account.
Yikes.
Or a weekly or a monthly. And what I see is oftentimes when businesses start getting in over their head, they can't make payroll, they start taking these very horrible predatory loans. And because they're business loans, there are no consumer protections. If it were a consumer loan, there would be all kinds of rules involved that they have to disclose, but they're business loans. So the government and the businesses that are lending money assume that you're financially savvy and you know what you're signing because you're a business owner.
Or they assume they can take advantage of you. You know,
well, that's how it turns
that
out.
word predatory, because there are obviously ones that are shady.
They are. And if you're uploading bank statements to a website in 24 hours, you get money. That's you're like one step away from, you know, some bad lending. Well,
and you know, look at the insurance or the interest rate also. You know, if you're paying out, you know, and I talked to somebody one time who said, yeah, it's only 30%. I'm like, okay. I mean, I was trying to not do the yikes look.
Yes.
You know, and there's certainly so many ways to appropriately finance businesses. You know, but you know, clearly people just starting out, or if they've had some issues, they're going to look at some of these that might not be the best for their business.
And the other thing to look at when you're starting a business is really setting it up properly. Have a bookkeeper, have professionals that help you. Everyone tells me, oh, I can't afford those things at the beginning. And the beginning is the time when that's your expenses that you should be trying to afford. Bookkeeping and the right legal entity set up and all of that. Don't shortcut those, because you'll save yourself thousands and thousands of dollars later by having this properly set up. So,
yeah, I mean, you know, it is, excuse me, sometimes a fairly large expense, especially to a brand new business.
It can be.
But you can't not do it. You know, when I decided to trademark the name The Business Power Hour, I thought, I'm a smart person, I can do this. And I paid my $75, I think is what the initial trademark application is. And, you know, and I filled out the form. I mean, it really was pretty simple. And, you know, and I don't provide products and I don't charge. And so, you know, that made things easier. But then, of course, I got back this letter of, you need yada, 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 yada. And I went, oh no. And I knew like from the first line, I could not do that.
Yeah.
But I also knew I had to trademark the name because if somebody else did, I could get in trouble.
Yes.
And that was the biggie. I mean, I didn't want somebody coming back and saying, you have to basically get rid of all of your podcasts.
Right.
Because, the image is there, the name is there. I referred to that throughout the program. I mean, all of those things. And
Yep.
so I got a good trademark attorney.
Mhm.
It was not inexpensive. I got what I paid for.
Right.
And it was a little tricky because of the words, the, business,
Right.
power, hour. Those are all pretty common words.
Yes.
And so she had to do quite a bit of work to show how this was, a standalone entity. I mean,
Yep.
she did a great job. And I refer people to her because, I think it's great. But yeah, it was worth it to me to spend that money to not have to worry about it again.
Right. And I don't do my own trademarks. I'm a lawyer and I don't do my own trademarks. I have a trademark attorney who does them. And I will say for small businesses too, that from a financial standpoint, protecting your ideas and your intellectual property is something that's way overlooked.
Right.
And so, especially the legal law firms don't protect their IP as much as you would think they would.
Right.
So it's a great resource to have a trademark attorney because you should be protecting your ideas, especially if that's what you're selling is your brain.
Right. And when you're setting your business up, I mean, we mentioned there's LLCs, there's S Corp, there's, all sorts of alphabets that are out there.
Yeah.
And you need to figure out which one is right for you, and that's where it does get confusing. And so, again, have the expert do it. I saw a great example the other day where, you mentioned that you don't do trademark. I mean, you're very specialized. And people specialize for a reason. I have my general practitioner, but I wouldn't want them doing open heart surgery. And it's that different level of expertise and knowledge, and they can do it faster too. I mean, that's usually the other thing.
Yeah, it's really interesting that, especially in the legal world, we niche down quite a bit. You try to be a general practitioner. You can't learn all the law around everything.
No.
And business owners should be trying to find their niche that they need to be in, because that's where you'll make the most money.
Right.
And you won't have to talk to me with your debt problems.
Right. Yeah. But the important thing is maybe everybody should be talking to you or someone like you, because we might be in a good financial situation, but we might be able to get into a better financial situation. So talk to us about how that can work.
So a lot of times people wait way too long to talk to me because they're scared.
Right.
And what I would prefer is that they would talk to me before they make decisions, before they decide, I'm going to take on this merchant cash advance. So yes, I do a lot of the consulting where I'm not trying to get someone to hire me to be their debt attorney, but we're trying to avoid having to hire me to be their debt attorney. And so a lot of times those discussions look like, okay, do we have the right insurances? And it sounds like financial planning. It does. But most financial planners don't talk about the debt side. They're looking at investment.
Right. Because they're wanting you to make money. I mean, that's their goal.
And so I'm kind of in this weird position where I'm trying to help people avoid ever having to talk to me again.
Right. Yeah. It'd be nice to tell people buy.
Exactly.
And to only see them at Starbucks.
Right. And so reviewing all of those things before you make decisions, I would say that's one of the biggest mistakes people make is they try to solve things themselves, not necessarily the setup of the business, but they get into trouble. And then they're like, oh, I can Google this and figure out what I should do with my problem. And that's where some of these scams come in, like debt settlement scams and things like that.
And the commercials make it look really nice, right?
So I do a lot of talking on the psychology of financial stress.
Right.
And those late night television commercials are designed for people who can't sleep and have insomnia.
Right. And so they're either scaring you even more, or they're making it, oh, la-di-da-di-da, this is so easy, as opposed to, okay, let's sit down and think about this.
Right. Yes. And so I have a lot of heartburn sometimes when I start looking at the clients who they make all these decisions because they think they're trying to do the right thing and solve their problems themselves, when really I could have helped them avoid a lot of the problems. So yes, proactive, I guess, is what I'd like my clients to be.
Well, and some of it really is in just good planning.
Yeah.
Many years ago, I worked for a great company. I love them dearly. And I was their business manager, business office manager.
Mhm.
And they were all these really nerdy guys that designed computer software. And this was back when you FTP'd it to,
Right.
Al Gore had just barely invented the internet. But our only client was the federal government.
Mm.
We worked for NASA and we worked for Navy. Again, great folks. And we did really cool stuff. I mean, the software that they were designing was incredible. But the government typically runs a little slow on payment. But we knew that they would run slow on payment. And so we structured the business around that. I mean, this wasn't, we just knew, okay, we didn't even try with net 30. That wasn't gonna, I mean, there was no way. And it's just because, there's a pretty big process that, especially when you're invoicing them, 6 and 7 figures, that things have to go through to get paid through the government. And so we knew to really make sure that we planned on that slow payment. And so that was just kind of how we ran the business. Now, we did have a line of credit.
Yeah.
But that was always the absolute first thing that got paid off.
Yes.
And that was just the way we did it. And then, some of it too was in, the preparation, because many times the invoices weren't paid because there was an error. And so if we just made sure that we submitted it without errors, it went a lot faster.
Right. That makes sense. Yeah. A lot of it is just making sure that you know what you need. And credit is so easy to get, like these lines of credit.
Right.
Yes, you guarantee them. But I find that people tend to over rely on them sometimes, and then they let them sit out there.
Right.
Thinking, oh, I'll pay it off, or I'll pay this bill first. But that was good. I appreciate the fact that you paid off the line of credit first, because
I mean, well, I worked for really smart people. I mean, these are a lot of PhD people. Which, and now the funny thing is, I'm sure you deal with a lot of PhD people.
I was just going to say, a lot of my clients are lawyers and doctors and dentists who weren't taught finances as part of their undergrad or high school or graduate degree program.
I mean, I'm a lot older than you, but we never, that was not part, I learned how to make muffins and do long form math, but a checking account? Oh, no. And then you toss in now all of these other forms of payment.
Yes.
I mean, I had a woman on the program one time who talked about bartering, and oh my gosh, now she knew exactly what she was doing, and it was very contractually laid out. I mean, and all sorts of things. And so she was doing it the right way. But now you've got that little thing called Bitcoin.
Right.
And I don't know, do people pay in NFTs? I try to avoid a lot of this stuff, but yeah, Bitcoin, I would imagine, is one of those that is now just that. And somebody asked me the other day, will you take Bitcoin? And I said, oh God, no. No. And I won't even, no.
No, I can do it. Yeah. It's so interesting to see like how the world changes and like how you have to adapt with it sometimes. And we're paying with Bitcoin these days. And I will say, chapters in bankruptcy, trustees are very interested in the Bitcoin and these alternative forms that people have, because sometimes they're worth a lot of money and the trustee can liquidate them. So Bitcoin has kind of changed my world a little bit. So yeah.
Well, and of course, the problem with Bitcoin is it can be worth a lot one day and not a lot the next day. I mean, which is true with obviously a lot of financial things. But yeah, Bitcoin is still just one of those entities that now, there are I know businesses that only deal with Bitcoin.
Yeah.
But they also fully understand the risk of doing that.
Yeah, I think you have to, again, it goes back to the education of what you're doing. If you're educated in something, then it's easier to avoid problems with it. And going back to high school and finances, and my pet peeve word is financial wellness sometimes, because a lot of companies try to introduce financial wellness into their companies for their employees. But what they're doing is they're introducing it too late. Once someone's already in financial stress, financial wellness is like a condescending topic that they don't want to talk about, because
and again, you're embarrassed by it. And
exactly. No one's going to go to a seminar about debt. Like, because I've done seminars and things at offices and things like that. I'm like, no one's going to come to this because no one's going to admit that they have a debt problem or a credit problem. And so you have to look at the person, the financial wellness part, the financial education. If it started younger, then I could work myself out of a job. That would be
Right.
my goal.
Which would be great, right? You know, you
Yeah, I would
retire to
love
the
it.
beach. Mhm.
Yes.
You know, and it is something that we all do need to think about. You know, and look at our personal as well as our business accounts. You know, we have personally, we use one credit card,
Mhm.
and you know, because hello, you know, and you know, granted, businesses are taking cash again. That was a very interesting thing when COVID was like, and they would not take cash. I'm like, well, I didn't want to touch it either. So,
Right.
but you know, and we 100% pay off that card every month.
Mhm.
And the reason we do it is we get a big chunk back, a
Right.
percentage,
Mhm.
because we pay it off every month.
Mhm.
You know, and so we actually put lots of things on it that we really could pay cash for,
Mhm.
but it's like, no, let's put it on the card and get that percent back. You know, and
Exactly.
my husband, you know, he'll do that. When we were buying a new car, he's like, how much can we put on the card? I'm like, for a car?
Yeah.
But he was right,
Yes.
because we did get, you know, a percentage back. You know, and I think that's something that businesses need to look at
Mhm.
too. Is, you know, okay, yes, we have to use credit cards, but
Mhm.
are you paying enough? And more importantly, and I'm really guilty of this one. If you're getting perks, are you using them? I mean,
Right.
I remembered one time, hey, I've got a bunch of points on this card. I bought a printer. You know?
It's very true though. And there's a lot of stuff out there about savvy use of credit cards
Mhm.
and strategic. I agree. Like put everything on a credit card. First of all, it helps protect your bank account.
Right. Mhm.
Don't pay with a debit card or with
Mhm.
ACH, pay with a credit
Mhm.
card. So you're protecting yourself from identity theft. And then are you using all the perks and that kind of
Mhm.
thing? But then I run into people who are trying to do that over too many cards,
Right.
or they're
Mhm.
trying to, or
And
they
I've
don't
I've fallen
pay
into
it
that
off.
trap before. The
Yeah.
almost, you know, pay from one and, you know, do a cash advance
Yes.
on one to pay off the other one.
Yeah.
No.
Don't do it. And that's usually when someone should start thinking about talking to someone like me, is
Right.
when
Mhm.
you can't pay off something,
Mhm.
when you're making minimum payments. I often
Mhm.
say if you can only make the minimum,
Mhm.
that's a bad sign.
Right.
And especially right now with interest rates going up. So right now interest rates are kind of going up, and
Mhm.
everyone thinks of the mortgage business as
Mhm.
where that affects it, but it also affects your variable
Right.
rate
Mhm.
credit cards.
Oh yeah, yeah. And even if it's just, you know, a half of a percent, if
Yep.
you've got a pretty hefty
Yes,
balance, that ends up being quite a bit.
it does.
You know, and you know, society, especially here in the United States, really is designed for credit.
It
You
is.
know, I mean, you go into pretty much any type of big store, you know,
Mhm.
retail type of store, and the clerk says, "And do you have our credit card?
Right.
You'll get a 10% discount on your purchase today." And I always tell them, no, you
Mhm.
know, here's my one, I get this back on, you know, and but you know, and they said, well, you can cancel it right away. And it's like, yeah, but your credit doesn't like that. You know. So talk to us a little bit about credit scores, and because that's the other thing that's always in the news. Oh, I can use this app and automatically raise my credit score 30 points. I'm thinking that's not, something's off on that.
Yeah, then that's a little tricky too because of what they're advertising versus what they can deliver. But credit scores are one of these black hole type
Mhm.
topics sometimes because there are so many credit scores out there. Everyone
Right.
thinks they have one credit score. You really have like 300 credit scores at any
Mm.
given time. And it's because each of the credit reporting agencies have different algorithms. If you're
Mhm.
going for a mortgage, they have a different way of running your credit than if you're going for a car loan or
Okay.
a credit card. So there's all
Mhm.
these different credit scores out there. And I would like to emphasize to your audience that you are not your credit score.
Mhm.
Because I get a lot of people who are very offended at their credit scores, or they're
Mhm.
embarrassed of them. And all a credit score is a risk factor. How
Mhm.
risky are you to lend money to?
Mhm.
And so credit scores range, most of the ranges are like 350 to 850 or
Mhm.
300 to 900, depending on what system you're looking at. And most of it is based on, do you make your payments on time?
Mhm.
And are you not using all of your debt, all your
Right.
credit that you have
Mhm.
available? Really, that's about
Mhm.
70% of your score.
Mhm.
And so I often have clients will come in for a credit review and they're like, I have a credit score problem. and I look at their credit report, I'm like, you have a debt problem.
Mhm. Right. Yeah. Your credit score is low because your debt is high.
Right. Yep.
Mhm.
And so I think there's a lot of miscommunication out there about credit scores and how to increase your score and credit repair. There's really no such thing as credit repair. You
Right.
can fix
Credit
things that
repair
are
is pay your
wrong.
debt.
Well, you can fix things that are wrong and you can rebuild, because I do
Mhm.
a lot of rebuilding with clients.
Mhm.
But repairing to me is such a misnomer
Right.
out there.
Mhm.
And there's so many scams in that area that I don't even mess with credit
Right.
repair.
Mhm.
But understanding your credit score,
Mhm.
people who check their credit score are 70% more likely to have a higher credit score.
Mm.
And the reason for that is it's self-selection.
Mhm.
People who check their credit scores have good credit scores, because the
Right. We
people who
like
have
to
low
see a
credit
higher
scores
number.
don't check.
Mhm.
But if you want to be the one who has a higher credit score, then check your score, because that's where you're going to get the information that you need to increase it. So,
Mhm.
yeah.
Right. And again, like you said, there's so many things that fall into, they pull that, and sometimes they pull it when you don't really want them to. We bought a new pickup last year.
Yeah.
For me, I'm the pickup person. And and I mean, we were going to pay cash. This
Yep.
is, so, and so they said, well, we need to do all this. I said, no, you do not. We will be paying you cash. Oh no,
Right.
we have to process it like we're processing a loan. And I said, no, because my fear was that somehow they would process it as a
Mhm.
loan. And
Right.
I actually had that happen one time. And,
Mhm.
it was like pulling teeth to convince them that, I was going to go through my credit union as opposed to them, because really different rates, right?
Yeah. Yeah.
But they had done it just to make sure. And we said, no, we will be paying cash for this vehicle. You do not need, all of that information.
Right.
If we get to the point where we can't pay cash, well, then we wasted a couple hours.
Right.
But no, you're not doing all of that. And I think that's the thing that people need to remember is, do you really need them to have been doing that?
Yes. Well, and standing up for yourself, for your rights too. I have a hashtag I use is know your rights and options a lot of times, because a lot of people don't know what their rights are. And like, you knew that they didn't have to run your credit,
Mhm.
but a lot of people would have just signed on the dotted line and
Mhm.
said, oh yeah, run my credit. And
Mhm.
they didn't have to.
Right.
So
Well, I mean, those are official looking people and they give you official
yeah.
looking paperwork, right? And I understand that some of it is to cover their
Right.
collective tales. But at the same point, yeah, you just need to know what do I have the right to do? And that's where, a little bit of Google is a good thing.
Right. I'm not against Google. I'm usually against Google when people are selecting things that are biased, like it's playing into what they want
Right.
to say.
Or
So,
playing into fears. I mean,
yeah.
there's that too.
Yeah.
So, talk to us more about how we really can alleviate stress, even
Mhm.
if we're in a good situation, right? Because everything could be great, and a pandemic hits, or all of these things. So, what are steps that we can take
Mhm.
to make sure that things are okay if something happens?
So I think the biggest thing to do is know what your finances
Okay.
are. A lot of people don't have any idea what their
Hmm.
finances are, and having emergency funds and savings.
Hmm.
So make sure that you're putting money aside each month. So when something does happen, you don't have to immediately go to credit.
Right.
If you lose a job, I will say most of the people that I have in bankruptcy aren't there from spending habits.
Mhm.
They're there because something happened, a divorce happened,
Right. Some
medical,
catastrophic type of
something
event.
happened. And it may have been years and years ago,
Mhm.
and they've been spinning their wheels
Right.
for
It just,
5, 6,
yeah,
7
that little
years.
hamster wheel went faster and faster.
Exactly. So having some money saved up in a savings account, put
Mhm.
up a percentage aside each
Mhm.
paycheck that you get,
Mhm.
or if you're a business owner, make sure you're saving back something to
Mhm.
keep in your savings account,
Mhm.
because that's the most common reason people have to dig
Mhm.
into credit is they don't have a savings account.
Mhm.
And then start investing for retirement when you're, 10 years old.
Mhm.
If you have any audience members who are 10 years old,
Mhm.
start investing in retirement now. A lot of America doesn't
There's that
understand.
thing called compound interest, right?
Exactly. The compound interest is huge,
Mhm.
and saving for retirement. I have so many people in their 50s and 60s that come see me that have about $100,000 in their retirement accounts, and they
That's
think
not
that's
going to
enough
cut
to
it.
retirement on.
Mhm.
They think that's going to be enough.
Mhm.
And so start saving for retirement early, even if you're just putting, 5%, whatever your company matches, at least put
Right.
that
At
in.
least do the match.
Yes. And then keep saving for retirement and don't touch it.
Mm-hmm.
So if you're ever in a situation where you're like, oh, I'm going to have to tap into my retirement accounts, stop and call me.
Right.
Don't do it because you'll regret it later. I promise. And 401k loans are another hot topic. I would not recommend 401k loans either. You want your money in the market, riding the highs and lows, because that's how you retire early and with what the funds you need.
Right.
And then also, if you are properly insured, I know we've talked about insurance quite a bit, medical insurance, all these insurances can be expensive. Talk to a professional and find out the right insurances, because that will save you if something does happen.
Right.
A medical event, short-term disability, long-term disability, an umbrella policy in case you accidentally hit someone on the freeway and it's your fault.
And you were on your way to the business meeting. Yeah.
Yes, something like that. And so just looking at your finances, I would say most people don't look at their finances at all from month to month. As long as they have money in the bank account.
I know.
And the problem with that is then you're not planning for what can happen in the future. You're just living day to day.
Right.
And so it's a hard conversation to have, though.
Especially for people who have limited income, know, and it doesn't, I'm using limited income as in, it doesn't matter how much you make. If you're spending more than you make, you have limited income. I mean, you could be the person that earns $250,000 a year and still have problems.
Yes. Yeah. And don't look at anyone else's examples for what you should be doing. I see all kinds of crazy things on the internet about people who are, living paycheck to paycheck and make $1 million a year. And then the $25,000 a year person is saving $10,000 a year for retirement. So don't look at other people, look at what you can do for yourself. I did see an interesting article yesterday about buy now, pay later, all of these online.
Right. Yeah. Whatever it is, it's, hey, nope, you don't pay for a year.
Right. Or 4 or 5, let's you break out monthly payments for 4 or 5 months. And I have an esthetician who told me that she can take payments now for facials. I'm like, if you need to put your facial on a payment plan,
you shouldn't be having a facial.
Having a bigger discussion.
Yeah, because that's what, $50 maybe?
Yeah. But people have been stacking them up and they don't show up on your credit reports because they're not really credit. They are, but they're not. And so I've now
because they're not reporting those.
They're not reporting those. And so now I'm seeing all these like $50 a month payments that add up to $600 a month that your debt, you're really overextended because you have all these payment plans that you're on. So pay attention to those things. Look at your subscriptions and things like that.
Right.
So.
Well, and also, if you're the business owner, and this is where I have heard people get into trouble. They don't look at their own numbers because I have a CFO. I have an accountant. I'm sorry, it's still your business and your responsibility.
Use those reports that your accountant and your CFO are generating to actually understand what your numbers are, because there may be possibilities there for you to expand your business. Right. You can make more money, a higher salary. There's good reasons to look at your numbers as well as bad reasons. So you have to, but look at your numbers and understand numbers. And
if your CFO or your CPA or your whatever the alphabet is, if they don't want to sit down and explain the monthly numbers to you, danger.
Red flag, huge red flags.
Right,
yes.
Right. Yeah. I mean, I'm in Atlanta, and the big news here is that the Chrisleys just got, they were convicted of all sorts of different things. But the big thing during the whole thing was, it's my accountant's fault. and of course the accountant said, no, I did what they told me to. And so, that was what it came down to. But yeah, it should never, you should never be saying, I am the business owner, but I didn't know what was going on. Right.
And there are a lot of businesses that I deal with that have been embezzled from and have been, or other types of fraud.
There are smart people can do those things. I mean,
Yeah. A lot of law firms too. They have trust account issues because they have someone who was managing their books and was writing checks to themselves and making it look like, whatever.
It was a payment for facials.
Yeah. Right.
Mhm.
So I've seen a lot of that over the years too, with people not knowing their numbers. And then, all of a sudden they're missing $200,000. And I'm like, that's kind of a big number to be missing.
Yeah. Yeah. And it's kind of a percentage thing, right? If somebody could be missing 25,000 and,
Right.
but yeah, you should always know, at least have a general idea of what your expenses are, all of those things, because then you can look at it and go, wait a minute, I am spending too much
Something's
on
off.
office supplies. This looks very curious.
Yes,
And
exactly.
even if you're doing your own books, like we were saying, look at it and go, how many times did I go to Starbucks for a business meeting? Maybe not. So,
Yeah.
cool.
The only way you can actually be proactive and cut expenses is if you know what the expenses are.
Right.
So until you know what they are, and sometimes they're hard to look at. Sometimes you're like,
Yeah, I spent how much? Yeah, but it can also be positives. I mean, you can look at your numbers and go, okay, we've been spending X amount. We can increase that,
right.
and so that's why it's so beneficial to know what your numbers are.
Exactly.
Well, oh my gosh, Jen, this has been so great. And we definitely have to talk to you again, because obviously this is a problem that does not go away. And as you were saying, as we're coming more and more out of the pandemic, issues are going to arise, because there were so many things that were stopped for a while, and all sorts of things. And so, we definitely have to have you back on. But now, can you own, I mentioned at the start that your offices are in California. Do you only practice in California?
So I'm licensed in California and North Dakota because I grew up in North Dakota.
Okay.
I can handle federal taxes, so IRS taxes anywhere in the world.
Okay.
For US taxes. And I can handle federal student loan issues because I do a lot of student loan work anywhere, because it's all federal based. But as far as most other debts go, it's California and North Dakota that I'm licensed.
Okay, great. But you do have other resources. So tell us how people find you and what are the services that you can provide.
So my website is jenleelaw.com. It's very easy, nice domain. And on the website, it actually has a menu that we offer. We do a debt strategy session, which is talking through debts. And we do a credit review session where people think they have credit report problems. And sometimes it turns into a debt strategy session at the same time. We talk about student loans. I also enjoy doing premarital strategy sessions about finances.
Very important.
Because a lot of people don't understand how their future spouse's debts and credit can impact their lives. And so I enjoy doing those. I also do a divorcing session where we talk through people are divorcing and
those things happen.
Yeah, we want to solve it. So I do a lot of different types of sessions that are explained on our website. I do have a podcast called Debt Therapy that I work off of sometimes and do some financial coaching under the Debt Therapy, which I can do nationwide. So
perfect. I love it. Well, this really has been fascinating. And I hope that more than anything, people have realized it's not as scary. You're not a bad person. You're human. I mean, I think that's probably like you said, 70% of people have some debt issues. So, 30%, yay. but obviously the majority has some debt issues, small and large. So it's okay to ask for help, and if they speak with you, if they speak with someone else, it really is okay.
Yes. They can speak with anybody as long as they can help. I don't care who they talk to. I just want people to find help.
Get help.
Yes.
Well, I have really been having a great conversation with you. Do you have any final thoughts for everyone?
So my final thought is you are not alone. That's what I tell people all the time. You are not alone with dealing with any of I promise you, I've seen whatever issue you have multiple times. And so my final thought is always remember you're not alone and there is help out there. You just have to ask for it.
Great. I love it. Well, I am Deb Creer. I've been having an absolutely wonderful discussion with Jen Lee of Jen Lee Law. You have to enunciate, right? And I can't wait to have you on again. But until then, everyone have a great day.
Tune in for our next program for even more trends, best practices, and techniques for how to make your business a success. The Business Power Hour, hosted by Deb Creer, is proud to be part of the C-Suite Network.